Good evening, I'm Liyana Hassanel. Welcome to Bizworld. Tenaga Nasional Berhad's share price retreated this morning following news of a potential restructuring of electricity tariffs in the first half of 2023. At 10:35 a.m., TNB'S shares declined by 0.64% or 6 cent to 9 ringgit 28 cent. More than 211,000 shares were traded in early trading. In a note, Hong Leong Investment Bank said the news was a positive sign, as it showed the government's willingness to restructure the subsidies, ensuring the long-term sustainability of the power sector. Despite having a neutral impact on TNB, the firm believes the measure will be viewed positively with regards to TNB and the power sector.
Jika dikenakan pun terhadap hanya
RHB Investment Bank Berhad expects some rationalization in the government operating expenditure, while a more targeted approach towards subsidies may be implemented in the revised budget 2023. The firm said in view of the still elevated living costs and inflationary pressures, the pace of the adjustment is likely to be gradual. The investment bank added that the potential revision of the development expenditure allocation might be possible, especially for new and existing projects that have yet to start the tender process. It also noted that any major changes to Budget 2023 might have a significant impact on the fiscal deficit projection, adding that it maintained its projection at 5.5% of GDP for the time being. To recap, the biggest ever budget 2023, totaling 372.3 billion ringgit, was tabled on October 7th. RAM Ratings expects the pre-tax profit performance of banks to show mild improvement next year. This despite Treasury-related and investment banking income remains uncertain. According to the rating agency, narrower net interest margins and slower loan growth would likely be offset by more moderate impairment charges. Operating expenses will tick up but should be largely contained. At the after-tax level, banks will benefit from the absence of the one-off prosperity tax. Malaysian Bank's profit performance in the third quarter of this year improved from the previous corresponding quarter. This buoyed by broader net interest margins, stronger loan growth, and lighter loan provisioning expenses. Property developers need to re-strategize their business approach so as to remain attractive in the market. Malaysian Resources Corp Berhad Group Managing Director Muhammad Imran Muhammad Salim said developers would definitely be affected by cost increases next year.
New developments and new things are being planned, we are definitely to see a cost increase due to the impact of supply material costs and labor costs that is impacting the industry currently. So we will definitely see a cost increase, and that's where the developers have to be very unique on how they want to position themselves.
Or recycle plastics or whatever, and then the way...
He added that developers can also reduce the number of property developments in the short to medium term. Another approach is reviewing planned product launches in order to avoid oversupply in certain sectors and locations. Commenting on the rising interest rates, Muhammad Imran expects demand to fall slightly and not severely affect the market. The Federal Reserve will deliver more interest rate hikes next year, even as the economy slips towards a possible recession. According to Fed Chair Jerome Powell, a higher cost would be paid if the U.S. Central Bank does not get a firmer grip on inflation. And recent signs of slowing inflation have not brought any confidence yet that the fight has been won. Those rises in borrowing costs would come despite an economy that Fed officials projected will operate at near stall speed through next year, with an annual growth rate of 0.5% and an unemployment rate nearly a full percentage point higher by the end of 2023. The Fed's Policy Setting Committee raised its benchmark overnight interest rate by 0.5 percentage point and projected it would continue rising to above 1% in 2023, a level not seen since a steep economic downturn in 2007. That's all the time we have for Bizworld. I'm Liyana Hassanel. Thank you for investing your time with us.